Morning, how's everyone? Hope you're keeping well. We're here with a review of the US markets, the US dollar, Bitcoin, oil, and gold. So, what to say about the markets? They remain volatile as ever. The attacks on the energy infrastructure are making the markets extremely nervous. Bond yields are surging, energy prices are surging, whereas stocks are slumping in view of the ongoing situation in the Middle East. Just in the last hour or two, the futures across the US markets have dropped about 0.5%, given the renewed threat, the new concern that is being voiced that the United States is considering the extremely high risk move of taking over the Haji Islands in a bid to pressurize Iran to open up the Strait of Hormuz. If that happens, the consequences would be horrific for the markets, for the energy infrastructure, and for the economies all over the world. So, nervous moments for the markets, and we're all waiting to see what happens. In the meantime, markets are trying to pare their losses from yesterday, but don't seem to be making much progress. There was some recovery, but all that has evaporated in the last hour or two. Um, Bitcoin prices again trying to make a recovery. Bitcoin dropped down to below 70,000 yesterday. It has climbed just above that mark to 71,000, but still struggling to bear its losses from yesterday. Oil prices are hovering around $110 a barrel, with not much sign of recovery. Gold prices have dropped to they had dropped to about $4,500. They're still hovering around the 4,600 mark. So they are staying low as oil prices increase. The euro is also weakening against the US dollar, trying to pare its losses, but not much movement there either. Today, I think the markets are going to remain nervous. They will, unless there is any further bad news emanating from the Middle East. I think the markets are going to try and pare some of their losses. It seems to be trying to make an effort to do that. So, fingers crossed, and we will keep you posted. Hope you have a wonderful weekend. We will be back with more next week.